Well, ladies and gents, welcome back, guys. As we are approaching a new year, I thought it was a great idea to prepare you for what's to come next. Currently, the markets are in this consolidation period. There isn't anything or direction given to us, so you have to be flexible and fluid with your strategy. And I want to just guide you and direct you in the right direction when it comes to what to focus on and what I've been trading lately and how I've been trading. Because really, to be a consistent, profitable trader, you need to be fluid and flexible with your strategy. Let's get right into it. Smashy, smashy. Hopefully you enjoy this. Do not miss this video. Okay, guys, let's get right into it. First of all, happy holidays, happy Christmas if you celebrate. So what you're looking at right now is my statement from last week, all my trades that I made. And you can see that I actually made these trades and they were all different. So all of these trades were different. Some were short positions. So this here was a short position. Let's change the color to black. So short position, and I want to just write it down and then explain you the strategies that I used here, because you need to have flexibility while trading in the stock market or any market. You need to be flexible, and that's really how you find yourself being consistent. So you don't just force a trade because that's all you know. It's buying a stock or buying support or buying resist or selling resistance. So this was a short position because the stock was overvalued or pumped. Okay, this here was buy position because news, okay, of electric scooter, this was a Harley Davidson, or sorry, that's blue. This was a pump and dump. Okay, this was a pump and dump stock. This here was news of EV scooter or bike. Lucid, well, this was just a simple overbought, oversold strategy. So I'll explain all of that in a minute. PayPal was V-shape recovery. So the market took a hit and I bought the dip. So we call it buying the dip. And Tesla was the same thing, buying the dip. Now, all of these are different names, but it's the same skill. It's the same thing, just a different name. So let me explain it to you guys. But flexibility, being fluid is important, right? All of these things can be learned. They sound confusing, but they're not, I promise you. So just remember the name: overvalued, pump and dump, news, overbought, oversold, buying the dip. Let's go to Paint. And I prepared a little masterpiece for you guys. So, support, resistance, buy the dip, breakout, overbought, oversold, buy on good news, short on bad news. These are all strategies. Yes, right? These are all strategies, guys. And here's a chart I want to demonstrate. What is support, resistance? Right? This is also demand zone or sell zone or pressure zone. There's different names to these. It's the same thing. So, support is when a stock drops, okay, and it finds some kind of a buying pressure here, because this is where traders enter their buy positions psychologically. They say, well, this is where a lot of people are going to be buying, so it causes a stock to do this. So your job is to buy the dip at support. Or resistance is when a stock shoots up and it hits the all-time high. Obviously, traders want to get out before it hits the all-time high, so it ends up coming back down because there's selling pressure at the top. Buy the dip, we just covered that, all right? And hang in there, because not every stock is worth buying the dip on. It's when you stock drops and you buy it because you believe it's going to recover. A breakout is a stock that has some noise around, or social media stock, AMC, GME, penny stock. You want to see if it wants to do this. It wants to break out above market open price. Overbought, oversold is when a stock has been overbought the day before, and on the next day, you say to yourself, it's going to drop, so you sell it. Oversold is when a stock has dropped significantly the previous day, and you buy it, hoping for it to go up on the next day. Buy on good news. Well, like we said earlier, let's say Harley Davidson comes out and says we're going to do electric bikes, motorbikes. Obviously, investors love a company now that is dealing with innovations, because that means more sales for the company. So the news comes out here, the stock pops upwards. So you buy it. And again, you use price action to determine direction, but these things can be learned over time. So when should you use what? Well, support and resistance can be used every day. Buy the dip, and this here, if you want to simplify your trading, maybe just focus on this. But what stocks are you going to buy the dip on, right? You can't buy the dip on just any stock or a penny stock. Focus on blue chip. These are blue chip companies. Amazon, Apple. Look, if we just look at the dips here, every dip has been eaten. Now, obviously, it's December, it's low. Once January hits, these companies end up flying back up. Look, every time it dipped, it gained. Every time it dipped, it gained. Similarly here, every time it dipped, it gained. Right? Now, you go through turmoil. If there is something pushing the stock down, and if we just, this area here, we call it news, supply chain, right? These are external factors. Let's just summarize it. External factors, okay, that influence the stock in that stock market. Again, these stocks always recover because they are in the S&P 500. They make up the stock market or the NASDAQ, so they always recover. If they don't recover, then you have what? Well, you don't have a stock market. So for a lot of you, it's probably best to focus on blue chip companies. These companies, I know they are expensive, which is why a lot of you end up leaning towards penny stocks. But if you want to play it safe, then these companies probably will minimize your losses while maximizing your returns. Right? Every time it dipped, again, similarly, that's the same trend as Apple. So you can definitely say that this was external news. Okay? This is definitely external news. But without that external news, that stock would be selling. So these companies always recover. So buying the dip on these companies works best. And that's what I wanted just to show you guys, is just focus on the simple things that almost can guarantee you returns. You have to buy a breakout when there is buying pressure on that stock. So a breakout is this, for example. Okay, this here is a breakout. Okay, this is market open price, and then that stock shot up. So you use price action to determine a breakout, and you have to just have some screen hours to be able to tell what's what. So at the end of the day, the conclusion here is, right, you have to be fluid, and you have to learn all of these things. And you have to experience which one works, which one doesn't, which one has more returns, which one doesn't, which one can be minimized, and which one can be maximized. And generating returns like this can be done. Obviously, I use larger capital, but you're going to be using smaller capital. But that's really the whole gist of things. We keep our losses small. Yes, there is losses here. With Lucid, I believe, I took a hit on that day. But it was small. It was engulfed by a bigger profit. So that's all I want to show you guys. Focus on just what works. And what works are these two things for a lot of beginners. If you just focus on these and master buy the dip, breakout, and they can all be learned. They're simple to learn. We'll also teach that on the inside if you're interested, or just Google search them and see if you can learn on your own. So these are my favorite, because especially this one, buying the dip, for a lot of you beginners who don't have experience, just focus on what's in the S&P 500, because in the S&P 500, stocks always have to recover. If they don't, then you won't have a stock market, and investors' confidence in the country disappears. So that's me done. Peace and love, guys. Obviously, I can't say much. That's all I want to show you and explain to you. So yeah, peace and love, guys. See you soon.